Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. And oh my gosh, Scarlett, it's finally here.
I know, holiday shortened trading week.
And our last show of the year. Let's get to those biggest stories right now in the nearly $19 trillion global ETF industry. The year, as discussed, is winding down and stocks are moving higher, with the S&P 500 set for the longest winning run since 2018. We'll discuss the year that was and the year ahead.
And in just a few moments, Alyson Shupe of Goldman Sachs Asset Management will join us to discuss the outlook for 2026, plus the recent M&A in the industry.
And we discuss QQQ's shareholder vote to convert the product into an open-ended structure with Brian Hartigan of Invesco. All of that and more coming up. But as always, Eric Balchunas from Bloomberg Intelligence. He is here with us now, and he is looking at the flows. Eric, what do you got?
Katie, Scarlett, thank you very much. This is the end of the year, so I figured we would go over the year-to-date flows as opposed to the one-week flows. VU at $119 billion. If you've watched the show, you know VU is always at the top of the list, so no surprise to see it at the top here. This is amazing. This is $1 billion every 2 days for one ETF, right? So this is going to be a world record all time, beating its own record last year. IVV at $88 billion is a ton too. If this were, if it closed here, it would be the third best finish ever for an ETF. That's after the two VUs. Anyway, Treasuries had a big year. A lot of people bought cash along with buying equities. VTI, we don't talk about it a lot. This is total market, but also a huge year. SPYM is State Street's mini-me to SPY, cheaper, 2 bips, $35 billion. I mean, these are massive numbers, especially in the S&P. Took $240 billion in for ETFs linked to that index. And gold had a big year, and IBIT. IBIT was down 6% or 8-9%, depending on when you look. And gold was up 64%. So I'd say IBIT bringing in that much, despite the negative returns, was pretty big lift for it. Let's look at the outflows. Money keeps coming out of SPY because, again, it's more expensive. It's a UIT, and people like to use SPYM instead. EFG, that's International Growth, SOXL. This was up a lot, but people were taking profits, which is what you should do if you're trading these leverage ETFs. Good for them. CALS, this is the cash cow ETF, kind of some bloom off the rose there, money coming out of it. Energy, quality, and some more treasuries rounding out the list there. So now let's look at the full picture of the year. I'm going to show you total ETF flows by year. That's this yellow line here. And then here's asset classes. Let's just start with the total line. So you can see, like, ETFs for many years took in like $200-300 billion. I mean, I'm old enough to remember this was like normal. And it's like, oh my God, we took in $500 billion, big record. This year, $1.4 trillion, which is 25% over the record last year. And again, only 2021 came even close to this. And here's equities, record. Fixed income, record. Commodities, record. So when I look at the list of flows, Katie, if you did not take in money this year, you may have to rethink your whole strategy because the fish were biting.
Just hang up the spurs. Eric, thank you. Joining our conversation now is Alyson Shupe. She is head of global product strategy over at Goldman Sachs Asset Management. First off, Alyson, it's great to see you.
Great to have me. Great to be back. Thank you for having me.
2025, a huge year for the industry, also a big year for Goldman Sachs. I feel like if we're talking about the year that was for Goldman, we have to start with the purchase of Innovator Capital for $2 billion. That came earlier this month. Innovator, of course, a pioneer when it comes to defined outcome, the buffer ETFs. How does this purchase set Goldman up for 2026?
So, you know, we're super excited to be partnering with Innovator through this, through the announced acquisition, and it's really a complementary strategy to what we've already been doing to expand our ETF offering. As an example, we launched 24 ETFs globally this year, and just adding the Innovator range and that offering really helps us with diversifying that lineup even further in an area where Goldman Sachs has not historically competed, which is in the defined outcome buffer space. So we're going to be still doing, I'm already exhausted, but I'm super energized heading into next year, thinking about what we're going to be doing in partnership with Innovator, but also organically within Goldman Sachs.
How are you thinking about how big buffer ETFs will be as an overall share of your portfolio?
So, you know, obviously, most clients are using buffers as usually a way to hedge a portion of their equity position or maybe step out of cash. I don't see that changing necessarily, but what I do see changing within the context of a broader portfolio is the concept of buffer is now expanding to other asset classes. It's not just about equity buffer anymore. We are seeing Bitcoin and cryptocurrency buffer and income strategies. We are seeing all sorts of other types of use cases for downside protection and mitigation that's going to allow buffer strategies to have more than just one role in a client's portfolio. So I do see it expanding significantly from here.
I want to ask about one of the buffers, which you just bought, BUFB, BUFB. It's the Innovator Laddered Allocation ETF.
Yep.
My mom, which she doesn't bring up ETFs too often, she goes, I'm thinking of a buffer. I think like laddered makes sense because then I don't have to worry about it. And I'm like, oh man, if she's asking about that. So I looked into it. You have 220 million in this one. Now the First Trust laddered one has 8 billion. And I got to think Goldman just bought this. It's the same thing virtually. I have to think you're going to catch First Trust. Is that one of your goals here? And why laddered?
So I think in terms of the acquisition of Innovator and the ability to bring Goldman Sachs Asset Management scale and just prowess within the industry overall to the Innovator brand is really going to help us with expanding distribution and our client reach. The clients and the investors that Innovator has historically met with, talked to, and worked with might be a little bit different than Goldman Sachs, and so I think we can bring more to the table to really expand our reach to clients with buffer strategies. BUFB, as it's got a really, really important role because it prevents clients from having to think about the end point and the starting point and everything, and it's kind of a set it and forget it, but still a hedge strategy. There's actually many, many strategies like that in the industry, even in mutual funds, not just ETFs, that have also seen billions of dollars of success there. So we expect that to continue to grow.
Well, Alyson, you mentioned that you launched 24 ETFs in 2025. One of those ETFs was the Goldman Sachs MSCI World Private Equity Return.
It's a mouthful.
ETF.
GTPE.
Got it. Okay, let's go with that going forward. GTPE. It's interesting. You're basically investing in public stocks there to try to mimic private-like returns, but we have been talking a lot about XOVR, which has a very small slice of SpaceX. Yes. I believe right now it's only like 2% of the portfolio. Would Goldman ever consider a product like that, just adding in a little bit of private exposure to an overall portfolio?
We are certainly in discussions about all possibilities of what you could put into an ETF wrapper, as I think with many of our peers in the industry as well as yourselves. The biggest thing that we have to think about is the risk that you're taking relative to the position size that you can put in the portfolio to really get the bang for your buck, and it's something that has an intraday liquidity. So it's certainly something I would say, never say never. We don't have anything actively that we're looking at right now, but I do think that holding private equity and pre-IPO stocks has been around for decades. Mm-hmm. Mutual funds have been doing it for a very, very long time. It's not necessarily a new phenomenon. What is new is you're seeing more marketing intentionally around that. So it is certainly something that we've known about for a long time and we're keeping an eye on.
Well, let's stay on the theme of M&A where we started. Janus Henderson today being acquired by Trion and General Catalyst, and Trion already owned about a fifth of Janus Henderson, so it's really expanding that stake. But I'm curious to get from your take how you think this deal reshapes the asset management industry. We know that Janus has been active in the ETF space of late with it JAAA, or JA, as Eric likes to refer it.
JA.
How are you thinking about that? Janus as a competitor to Goldman under this new leadership?
No, so. I mean, Janus has been, wildly successful, particularly with JAAA, specifically in the CLO space. I think what Goldman, what we're trying to do, particularly with the acquisition of Innovator, is to think about offering total portfolio solutions to clients, having a very, very diversified range. I think there's not many players in the industry, particularly on the active side, that have the ability to offer a little bit of everything for everybody to be relevant and to have an impact on client portfolios. That's really what we're focused on, is being client obsessed and solving problems that can really meet a need for any part of a portfolio for a client.
You guys launched 5 or 6 ETFs this year. And I think, you have acquired Brian Lake, who went wild launching ETFs at JP Morgan and really put active on the map there. I have to think you have big things planned for next year. What can we expect?
We have a lot of big things planned. So we launched 6 ETFs in the U.S. We actually converted 4 mutual funds to ETFs as well. So we're actually at 10 for this year. And so, and then when we think about overseas in the UCITS market, we've been extremely, extremely busy building out our range for non-U.S. investors. We expect that to continue heading into next year. What our responsibility is to make sure that, with Innovator coming into the fold of Goldman Sachs, that we're continuing to do the right things for our existing clients and shareholders in both of those ETF ranges, and thinking about how do we complement and pair together what our roadmaps are. But I would expect a similar level of activity heading into next year.
All right, Alyson, we look forward to talking to you in 2026. Have a great holiday season. That is Alyson Shupe of Goldman Sachs Asset Management. Now, coming up, as we were talking about preparing for SpaceX's IPO launch, will its ticker be down to earth or out of this world? Find out next. This is ETF IQ on Bloomberg. Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. It's time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with market makers. We were talking to RBC on the show last week. I was inspired to take a look at this chart because it's very top heavy when it comes to the ETF industry. You can see that really it's 5 firms that dominate things. And up at the top, Jane Street, Virtu, Susquehanna are really the big kahuna here. So an interesting setup. Let's also talk about PRIV. This, of course, is the State Street Public and Private Credit ETF. We closely followed the launch of this fund, and it had a lot of hype, but you can see it hasn't necessarily translated into the flows. Pretty lackluster overall, and definitely more outflows than inflows, but we'll continue to watch that one in 2026. Now let's end with XOVR. That is the ER Shares Private Public Crossover ETF, which we mentioned in the last block. It owns a very small slice of SpaceX. SpaceX, which could potentially go public in 2026, our reporting suggests. And you can see after those headlines came out, inflows just took off, Scarlett. Really fascinating to see investors just try to get any exposure that they can to this stock.
Yeah, because this is the only U.S.-listed ETF with any kind of exposure to SpaceX. So let's talk more about this with Bloomberg's Isabel Lee, who's been writing about it. The interesting thing, I suppose, is the fact that as the fund's assets have grown, the SpaceX holding in the ETF, the value of it has shrunk.
Shrunk very much so. So they started buying SpaceX around December last year. And then when they first bought it, they made a huge announcement, press release and all that. We saw some little inflows, but not headline worthy. But then when Bloomberg reported the news that, oh, SpaceX might go public soon, there were 9 straight days of inflows amounting to $1.1 billion. It's now a $1.5 billion ETF. And in the beginning, in December last year, the SpaceX holding was around 20%. Now it has shrunk to like 2%. And I was looking at the holdings. There are 33. It's the 32nd, basically. It's so tiny now.
Oh, wow.
And a lot of the analysts we talked to said, it's just so tiny. Why would you even invest? But
well, where does this go? Because let's say that, this doubles again and suddenly we're looking at a $3 billion fund. Does the actual SpaceX stake, unless they manage to get their hands on more, just continue to sort of whittle down?
it looks like it. It's going to whittle down until there's just a tiny, tiny fraction. But to some really big musk bulls, any exposure is still an exposure because SpaceX, as we know, is really one of the hottest stocks here on Earth. Maybe OpenAI is a close comparison, but still, you want to gain exposure. And I asked Eric, actually, this morning, I was like, why don't more ETFs just hold SPVs? And he said, well, not all issuers really just want to hold illiquid holdings. And also, XOVR, they had to change their name and their prospectus in August last year before they were able to buy this private holding. So I guess you just have to abide by your prospectus as well. And most
yeah,
ETFs
I mean,
don't have
they
that.
bought SpaceX at like 185, and
Yes.
they've never bought more, and now it's worth over 400. We think. So that's you're almost sitting on a call option that's good, right? So I think that's why people. But we looked. Ron Barron has a mutual fund with 18% SpaceX. Kathy Wood has a mutual fund with 11% SpaceX. Nobody cares. That's how much people just want it in the ETF. I mean, that's my takeaway. You agree?
That is true, but then in the story that I published, that I hope you read, I'm kidding, I'm sure you did, Morningstar there said that this again is proof that maybe not everything should be put in an ETF. I mean, we all make the case that private equity, private credit should be an ETF, but then this is one of an example that maybe it's not that
I don't
great.
know. I feel like SpaceX is always the exception. Anything Elon Musk is the exception.
But the high priests may tell us it should be in a mutual fund, but the people want it in an ETF. That's
you
the
go.
problem.
Who are these priests? Where can we find
You know who they are.
But, speaking of which, SpaceX is set to go public, they said, according to our reporting, sometime in 2026, which raises the interesting question. When they do go public, what would be the ticker of this company?
That would, I don't know.
I mean,
we always talk about
it all
tickers
depends
in our
on
team.
how great it is,
Eric
right?
has a theory.
2 words.
Oh my God,
Matt
what is it?
Tuttle. This guy's sitting on a gold mine. He has SPCX, which is the perfect ticker if you
It's
think about
logical.
it. And remember, Will Hershey of Round Hill sold Meta to
Yes.
Mark Zuckerberg for an undisclosed sum. He's still working, so it must not have been that much. But
Oh my God.
Matt
I don't know,
Tuttle,
I
I
like-
think he's waiting by the phone right now.
I like SPX because that would be Space and X, although that would be confusing with SPX
I
index.
had an idea.
What is it?
I thought Mars would be a cute ticker, given that Elon Musk really
Yeah,
loves
I like that.
Mars. But then, Eric, I don't know. It seems like you were disparaging on our call.
No, well,
this
somebody was like, they're going to call it X or something like Mimi, and I'm like, I think this is too serious of a company, so I just think SPCX would be perfect. Mars is inspired, though. That's
Thank you.
I vote
What about
Mars.
Elon?
Take it.
Elon, E-L-O-N.
Elon is also great.
Well, that's the ticker for the 2X Elon ETF.
Oh, yeah, you're right.
But I think it closed, so it might be available. Anyway.
We'll find out.
That's a little self-serving, though.
All of this is self-serving. What are we kidding ourselves here? Bloomberg's Isabel Lee, thank you so much for joining us today. Now, still ahead, the Qs, the world's 5th largest ETF by assets, sees its owners vote to convert the product into an open-ended structure. We're going to discuss next with Brian Hartigan of Invesco. This is ETF IQ. This is Bloomberg ETF IQ. I'm Scarlett Fu, along with Katie Greifeld.
And it's time for today's drill down, where we focus on one ETF. Eric, hit it.
Today, Katie, we have an ETF that really needs no introduction. The Qs, we bring it up all the time. Invesco QQQ Trust Series 1. This is kind of like old school sounding. Well, this is structured as a unit investments trust. Up until today, really, it has transitioned to an open-end fund company, and I'll go over why that's important in a minute. Over here, $400 billion. That's the 5th largest ETF. That's a lot of money. 18 bips. Since it transitioned, it lowered its fee a little bit, so a little cheaper. It came out in '99, which is interesting. That was right before the dot-com bubble burst, and that's interesting because even if you bought it before, you know, it's up a ton still, despite that. Let's look at the DES5, which I never bring up, but I'm bringing it up today because I don't know if you know, we have regulatory structure field, the data tracks. As of until today, it said unit investment trust today, open-end investment company. That was hard won. Invesco worked hard to get that happen. What do you get with that? You get to reinvest your dividends daily. You can do SEC lending. It's just a little more flexible structure. That's why they're all structured like that these days. Let's look at the performance of the Qs versus its basically twin brother, QQQM, which is a little cheaper. And you can see that QQQM actually outperforms, or I say the Qs underperforms QQQM by about 7 bips a year. So that's where that fee comes in handy. But now that it's converted to an open-end fund, it might close a little of that gap. We'll see. Either way, it's a rounding error, but both two very, very popular ETFs, Katie.
Absolutely, Eric, thank you. Joining us to talk about this ETF, I'm pleased to say we have Brian Hartigan. He is Global Head of ETFs over at Invesco. And Brian, it's hard to know where to start because this was a monumental undertaking. It took you 3 rounds to get to that threshold. I guess the scene-setting question is, talk to us a little bit about, you know, the human effort and also the cost that went into getting out this vote.
Sure. Thanks, Katie, and thanks for having it. Of course, we're really pleased with the outcome. Investors voted to convert, as Eric said, into the open-end investment company, which is how the majority of the ETF market is managed today. And when you think about it, Qs in 1999 was one of the original ETFs launched and was really the trailblazer for the ETF market that we know it today. So it's fitting that, you know, this is something that really captures innovation like the Qs. It's never been done before, and we're doing something people said couldn't be done. So converting to the open investment company, you know, really gives shareholders the benefit of the fee reduction, the 2 basis points or 10%, and allows us to manage similar to the remaining or rest of the ETF market. But as you said, getting there, it's one of the largest ETFs. It has a very large and diverse shareholder base. So we had to get out to the investors to get them to vote. But in the end, for a $400 billion fund with millions of shares outstanding, ultimately got to over the 51% of shareholders voting for the change. And we're happy to report that over 90% of those investors voted in favor. So clearly, the investor base understood what was at stake here.
You mentioned how a lot of people said it was impossible, it couldn't be done. Yet you proved it was possible. Why did Invesco wait until 2025 to attempt to change the structure from a unit investment trust?
Sure, great question, and something, you know, that comes up often. But, you know, really it's a alignment of initiatives and opportunities. For us, it was really from senior management through the execution team to put forth, you know, a plan of execution and work with our partners, work with our shareholders, our platforms, and our board ultimately to move to this change. And as I said, you know, 90% of the voters that said yes could appreciate and understand what the value was here to truly modernize the structure. So it's really about a focus of efforts.
Hey, Brian, so you guys have QQQM, which is sort of the mini-me of Qs, but it's a little cheaper, 15 basis points. The Qs, as it is today, is now 18. What is to happen to these two? They're very close now. What do you tell the wholesalers? Which one are they pitching to clients, or would you merge them?
Sure. Yeah. Good question on the fee differential. But as we know, Qs is well known through the presence, through the liquidity, the ecosystem of derivatives, and it's the granddaddy of ETFs. It's been out there for 25 plus years. Is multiples 5 times the size of QQM, but you have a bit of a liquidity and different structure in terms of how it's ultimately managed. But as you said, we're bringing some of the structural elements together. We're able to reinvest our dividends now, which will, in rising markets, create better performance opportunities, as well as work with our existing network of partners to ultimately reduce fees, start to enable securities lending, and bring that performance differential down. But at the end of the day, it's a well-known name. People understand and appreciate and recognize the QQQ as a trust, and that's something that we'll continue to promote throughout the ETF ecosystem.
And Brian, I'm curious about how this sets Invesco up for 2026, because Invesco's CFO said on the company's July earnings call that basically converting the Qs into an ETF could benefit net revenue and adjusted operating income by about 4 basis points. Bloomberg Intelligence estimates that's roughly $180 million, which is a pretty nice windfall to walk into. So, I mean, what does that mean for Invesco, for your product lineup going into 2026?
Sure. Well, we're happy to report we recently exceeded $1 trillion in overall ETF and index investments within the firm. So ETFs continue to be a large priority for Invesco as a whole. And as I've shared, the advisor and open-end structure is one that we manage the majority of our platform on. So this really falls into the remaining shelf of ETFs that we manage. And this is part of our ETF strategy. And that's, really encompassing, being a 4th largest global provider, not just in the U.S., but in Europe with our platform and growing in Asia. So, we continue to focus on things like QQQ as a conversion opportunity, but, bringing smart beta, active fixed income and commodities into the fold and really bringing, quality ETFs to our investor base. That's part of our overall strategy.
All right, Brian, really appreciate your time. That is Brian Hartigan of Invesco. You can read about this drill down when you subscribe to ETF IQ newsletter. That is Bloomberg.com/ETF IQ newsletter. That does it for ETF IQ, the TV show for 2025. Happy holidays. This is Bloomberg.